Thank you to all of the sponsors, the members, and thanks especially to our speaker for making this event a success. We're going to go ahead and jump right into the pre-recorded presentation, but be sure to check out the website at ecomatl.org. That's short for ecommerceatlanta.org. And also go to our meetup page so that you can be notified of all of the events that are coming up. We look forward to seeing you at the next event.
My name is Stephanie Gruwell, and I'm here to talk to you about fighting fraud. A little bit about myself. I spent more than 10 years at Bank of America working in cash management as a product manager. I did some consulting for commercial and large corporate, and then I ended up in the learning world, learning and development world. And that led me to working with ChutingStar. My husband has a company. It sells skydiving gear globally, and they were growing at an exponential rate, and they didn't have the infrastructure in place to really deal with the volume that they were seeing. And so I came on board, not only built out the infrastructure, but worked with him as we built a brand new site on a new enterprise platform, and I became much more knowledgeable about e-commerce transactions, how the back end worked, and then ultimately began dealing with fraud and learning not only from my husband, but learning from some very expensive and painful mistakes. Those experiences inspired me to want to work in the fraud industry. I wanted to be a part of the solution. So I left ChutingStar and began working for a company who works in fraud prevention. They are an amazing company. I am not here on their behalf today. I'm not in sales with them. I am here as part of the small business community and to sort of share what I've learned and to share my experiences. There are three things that I noticed or learned in my time while I was at ChutingStar, three things that I had seen. There are, I'm sure, many more types of fraud, but these are the things that I had seen. The first is product fraud. This was the first thing I learned while learning about what fraud looks like and how it behaves. And product fraud is really around highly desirable products purchased with stolen credit cards that are used to convert for cash. Probably most common that we see. The second is friendly fraud. We called it skydiver fraud, and this is when someone made a purchase with their credit card, received that good, but then contacted their credit card company, filed a dispute, either claiming that it was a fraudulent charge or that they had never received the item. These were false. They had, but they were filing this fraudulently, and I think that's why they call it friendly fraud. The third is mule fraud. This took quite a bit of digging, but what I discovered was a fake company had been established, a website. They hired part-time workers across the country. These part-time workers had an Excel spreadsheet. Daily, they would receive goods from UPS or however it was shipped. They would then check their spreadsheet, regroup the items, and reship them out to a new address. The items that were stolen, we had 6 of them. It is a skydiving, it's an AAD. It's worth about $1,000. We lost 6 of them because the orders looked great. We thought initially that it was skydiver fraud, but it wasn't, because we had some people on the ground finding our items because they all had serial numbers, and we found them in Eastern Europe being resold on a different site. So mule fraud was these women never got paid. They basically worked a month for free, reshipped these stolen goods, and ended up being part of a fraud ring that they didn't even realize they were part of. And this was really the catalyst for me wanting to work in the fraud industry. I wanted to grab a couple of headlines at the time that I did the presentation to really illustrate the impact of fraud, the amount of money that is lost in fraud. And I think that we really all have been hit by it, either individually or within the companies that we work with. They've seen it at some point. At the same time that I'm building this presentation, it was prior to coronavirus being part of our daily discussion. And I can share with you that fraud is going to increase, and it's going to change during this economy. We're going to see new products that maybe were not important before, but they have become highly desirable, and they are known to be easily converted for cash. And maybe in the beginning, they're going to fly under the radar because no one's going to realize that these are now a targeted fraud item. We're also going to see more friendly fraud, and I think that that may be in part the result of UPS and FedEx relaxing their signature guarantee or signature required. And so for those, there's probably more that will result from that, but initially, just in some of the observations and some of the conversations that I'm having right now with others, especially around the shipping changes, ChutingStar requires signature for things over a certain dollar amount, and that no longer is going to be required. So we are concerned that we could be shipping things that people will claim that they never received. So things are changing, but you have to be really aware of what you're selling and what's happening. So with fraud, what I learned could be bucketed into 3 categories: knowing your customer and their buying behavior, having a payment strategy that's not only for conversion but can reduce risk, and the third is to be aware of the tools that are available for you. KYC, know your customer. This is really about knowing their buying behaviors and what types of orders might not make sense. Sometimes it's easy when someone buys, 30 of something. Those are easy, 30 of something that nobody ever buys 30 of. Those are sometimes the easy ones to pick out, but sometimes they could be disguised as what might look like a new market. So as a small business owner, new revenue, or any revenue is our livelihood, and new revenue is an opportunity to grow our business. So when we see a behavior that looks like we're touching a new market, then we're excited because we're thinking we're able to expand our business and rethink how we market and what else we might sell. For ChutingStar, it was GoPros. And there was a summer we started getting GoPro orders that were just one GoPro, and that was it, or maybe 2 GoPros. And it was someone who had never purchased from us. They were using PayPal. They were shipping to the billing address. And because they were PayPal, we could see that they were eligible for seller protection. And so we sent them out. They all resulted in disputes. So we took a look at the orders themselves, a little spreadsheet, and we noticed the same thing that we noticed every person was new. We could not verify that they were a skydiver. While they were using PayPal and seller eligible, they all resulted in fraud, even though we sent to the address that had on file. And that's when I learned this really is a great example of account takeover. A fraudster gains access to an account. They're able to make updates to the billing and shipping address so that it looks like it's eligible for seller protection, and the owner of the company is more likely to ship the good. So we were filing the disputes, and in the beginning, we were sort of stubborn. We continued to think this was a new market, and over time, we realized that it was just a vicious cycle. We were basically ordering more GoPros to satisfy the fraud need that is perpetuated through account takeover in PayPal. And even though there's a liability shift, meaning that PayPal reimbursed us for those orders, or they did not take the funds from our account because all of these were eligible for seller protection. So it's not as if we weren't made whole, but we felt like there was a lot of other soft costs and some hard dollar costs because there was a cash outlay for the purchase of the GoPros, which ties up our cash that we could be using for other things. So we made a decision at the time. We would no longer sell GoPros to anyone that wasn't a skydiver. And we knew that skydivers typically purchased them. It wasn't the first thing that they purchased. It's usually something they purchased later on after they've been jumping for a while. They also purchased them with mounts because they have to either be mounted to your wrist or your helmet. So we knew what the right buyer behavior looked like. And we made a line, a hard line, where we don't sell GoPros any longer. So the good thing about this is we haven't seen fraud since then, right? But the bad side of this is, did we potentially lose out on any of those good orders? And we'll never know, but it was a decision we had to make because we wanted to protect our time and our investment, and we did not want to perpetuate bad orders. For you, it's things to think about. Where does the buying behavior look normal? You may decide to go ahead and ship these types of orders knowing that there's a risk that there could be a chargeback. At the same time, you may also decide that you're not going to ship them because you don't believe that any of your customers would order that way or order those combination of items. Whatever makes sense for your business and what you sell and for the market that you're working with. For payments, I never really thought about payments as anything but a conversion strategy, as a way, something that is convenient for a customer to make a choice about the payment that they want to use, and to be able to have such great options that your favorite one just happens to be there, and it makes it easier to check out. ChutingStar uses credit cards and PayPal. PayPal is used as a hosted gateway. If you choose PayPal, you have to log into your account and make the purchase with your card that you have on file. So we did about, I think, 45% PayPal, 55% credit card. And I really learned this observation, or this thought was really more learned and acquired over the last year. But what I realized is that more and more companies are using wallet payment types, and they're also using loan products. And you're probably familiar with Afterpay or Klarna or Affirm, Sezzle. I think I've heard of something called Bread once. But basically, these are companies where your customer can apply for a loan for the purchase of just that product. It's usually split into some number of payments. And these payment types have a liability shift, meaning that if your customer applies for that loan, maybe something's $100, they were approved, they make the purchase, you are funded. If that customer does not repay the loan, if they default, or if it ultimately turns out to be a fraudulent transaction, the loan product company, there's no chargeback for you. They ultimately have taken the risk. So a good idea here on your payment strategy is to have, when you look at the percentage of your payments, see if you can reduce the number of payments that have the most risk. Credit cards have the most risk. That's where you're going to get your chargebacks on it. But wallet products have what I would say a reduced risk because of the inherent nature of how they're used. They're digitally stored in a phone that has an owner that uses a passcode or a fingerprint or a Face ID to be able to access. And they're associated as a pattern with that particular device. Each device that we have, iPhone, Android, doesn't matter what you have, these phones all have device IDs associated with them and data associated with that specific phone that you're using, or tablet if you're using a tablet. And so the wallet payment can be tied to that device. So there's a reduced risk there because of how they have to access the payment itself. And then if you can also reduce credit cards by adding in a payment option that is similar but has a liability shift, like a loan product. So maybe ChutingStar, instead of 55% are credit cards, maybe we're able to reduce it to 45% or 40%. And then within that 40% of those payments, what percentage of them are existing good customers and what percentage of them are brand new that we can evaluate. So it reduces the amount of risk associated with the transactions that we have coming in. The other thing I'll say about ChutingStar is we're within a specific industry. The customers are relatively the same. They only have maybe a handful of options to purchase gear, maybe. So we see a lot of repeat business, and we have while skydive grows every year and there's always new skydivers, there's always new customers coming in. We build more relationships rather than them being transactional. The last is tools. There's a variety of tools that are available for you. Some are low cost but require a lot of human intervention. Some are a higher cost and really almost need no intervention at all. Um, Manual review, from a high level, manual review is going to be having a human who has acquired and continues to acquire the knowledge and patterns and knows how to research and identify and validate whether a buyer is who they say they are. And so you may pay $20 or $30 a month for something like a white pages. I forgot the name of the company. Intellis, that's it. Intellis. We paid $29.99 for Intellis. I used Intellis to look up addresses or email or phone numbers to try to verify that what the information is in Intellis matched what we saw in an order. We used Facebook, which is also free, but skydivers like to take a lot of pictures of themselves, so we were able to try to locate a Facebook account. We also used property tax records. If someone owned a home, I tried to verify that they were indeed the owner of the home or they were a family member, and it made sense for us to mail things to the location. Industry-specific tools, if you are an industry that has people who have to get licensed or certified or have to pass a test or something that might be published somewhere, you're able to validate the customer on one of the industry-specific tools. So this is a low-cost item, low dollars. There is some risk associated with manual review. The first risk is that the person leaves, the person with that knowledge leaves. So it needs to be with somebody who's going to stay with the company. The second risk there is as humans, we only have access to certain information that's presented to us. So we can be a little overly cautious sometimes, especially, I know when I got burned really bad the first time, I became very overly conservative. Like I wasn't letting any orders in. And that's a mistake too, because you're losing out on revenue or you're making customers mad and they don't understand why their order's canceled, especially if it's something that they wanted really quickly for the weekend to go jumping. So you can be overly conservative and turn away good orders. So not affected by the dollars, but understand that there's risk in the people that are doing it leaving, and then also the risk of losing revenue. The second is a fraud detection tool. It is a scoring tool where each order is given a score and a grade, and you are able to create a threshold saying what you will ship based on the score or the grade and what you won't ship. And I'll show you what it looks like. This is count with a K, and this is a screenshot of me. This is just a test order that I was doing. The grade and score appear in the top left-hand corner. What typically happens is that there will be a threshold established, something like only A's and B's will be shipped, or anything above a 70 will be shipped. And if you ship an item and it results in a chargeback, you go back into your tool, your count, and you designate that that particular transaction resulted in a chargeback. And what these companies do is anytime that a chargeback is registered for something that they approved and was shipped, they ultimately record it and track it so that if that person with that device or IP comes back again, that grade may not be an A or a B, it may be a D or an F. If there's a history of chargebacks with that person, the score will go down. I've also seen where someone will be associated with, it'll tell you how many email addresses, like I think I have 1 or 2 email addresses associated with me for fulfilling. I've seen people that come across as having 300 email addresses. They're usually an F, but you can see that they're tracking all the history of that person, sometimes by IP address or their shipping address, or sometimes by their device. So it's a tool that helps you make the decisions. You can do some data analysis to determine what threshold you think makes sense on what you're going to ship. You still have to notify them that there was a chargeback, and you still take the liability for that chargeback. The third is fraud prevention. And fraud prevention, they are the liability shift, meaning that once they integrate with your platform. Transactions are passed. They will evaluate those transactions, and they're essentially underwriting them so that if they approve a transaction for fulfillment, they're saying if you ship this and it results in a chargeback, we'll reimburse you for the total of the order and your chargeback fee. So you don't lose any revenue with fraud prevention. So you may be paying a higher cost, but your revenue, you'll retain your revenue. The other thing that it does is they're able to see and detect some of these good orders. Like I think about the GoPro scenario for ChutingStar, having something like a fraud prevention tool might have helped us detect what was fraud, but also helped us detect what might be a good order, even if it looks bad. So a lot of times I'll work with merchants and they'll say, this order looks really bad and you approved it. We're like, yeah, go ahead, ship it out. Because if we're wrong, we're going to reimburse you. The other thing fraud prevention companies do, which is incredible, is that they can fight friendly fraud. So you're reimbursed, so your revenue is protected. At the same time, they can take something that has been a chargeback against you, and if they can see that it truly was not fraud and they can prove it to your processor, then that chargeback won't count against you. It will no longer count against you. So fraud prevention companies may cost more, but they open up new windows of revenue. They do not rely on a human having to know everything. They almost are like having a part-time expert who won't ever risk your revenue working for you. So this can be an incredible help, hands-free, something you don't really have to worry or think about. And there's some great companies out there. I mentioned Count for scoring. For fraud prevention, there are companies like Signified, Riskified, and Forder. So I'll show you what one looks like real quick. This is what it looks like inside a console. Something that is approved has a nice green guaranteed insignia there. So hopefully this was helpful. Hopefully you walk away with one or two things that you could immediately use or begin researching or thinking through. And I look forward to your questions. Thank you.
Thanks again to everyone who helped make this event a success. Thank you to the sponsors. Thank you, Stephanie, for the great presentation. For those of you who are watching this after the event, be sure to like and subscribe here on YouTube so that you get notified of future updates. Also, head back to the website, ecomatl.org, into the meetup page so that you can join our mailing list and join the notifications there at the group. We have more events coming all throughout this year. Some will be online, some will be in person, and we look forward to seeing you there.